Look at this, Bill. What do you think about that?
I mean, this is one of the most shocking things you will ever see if you're interested in the markets.
It's true. Hey guys, Alessio, hope you're well. By the way, how about that rally in Bitcoin? That's pretty something, huh? Now in this video, I want to show you something really interesting. This chart is truly astonishing. In fact, what you're seeing here on this chart are the record bets that the smart money, the so-called smart money, or the big institutions are placing. So these big guys, these big money institutions are placing record bets on something that has to do with one major market, the major markets. All right, guys, so join me in this video. It's going to be absolutely astonishing, and I'm going to tell you what this chart actually means. Okay, guys, it's going to be interesting. Join me. All right, guys, welcome back. So, by the way, you're probably wondering where I am and who this gentleman is next to me. First of all, I'm in Wales, good old Wales in the UK. Myself and my good friend Bill here, we decided we'd go out for vacation, somewhere for a holiday in the UK. And why not somewhere in the UK? Britain is an amazingly beautiful place. And so, again, if you haven't been to Britain or Wales, definitely come and check it out. We're right now in a place in Wales called, I think it's near Bala or Corwin. We're staying in one of these cottages, nice quaint little cottage here in Wales. I've known Bill for probably half my life. Both Bill and I have an immense interest in financial markets. On a daily basis, we used to talk and discuss the major markets and analyze the charts. And isn't that right, Bill?
Yes.
Yeah. Bill, what do you think about this place where we are right now?
This is an absolutely fantastic place to come. We're very close to Snowdonia and the views are spectacular.
Yeah, Snowdonia. I forgot to mention that. All right, guys, so something interesting came to my attention about a few days ago, and I want to share this with you. And it has to do with the meaning behind this chart. You see, guys, what's happening is, according to Jason Gephert of Sentiment Trader, and if you don't know, Jason Gephert is a fantastic analyst. He looks at statistical data. What he found was, and I showed this to Bill, and I'll discuss this with Bill in a few minutes. But essentially, guys, what Jason was saying was that recently, record bets were being placed against one major market by the smart money, by the so-called smart money, that is the big money institutions. Now, as you know, in the past, in my previous videos, I've ridiculed and mocked this idea that big money institutions are smart or intelligent. Actually, on the contrary, they can be quite dumb as well. However, according to this data, big money institutions are placing record bets against the stock market. You see, guys, I'm going to read it to you what Jason says here. All right, guys, check this out. This is from Jason, and he says, last week, traders of 50 or more contracts bought to open nearly 5 million put options. And as I'm sure you know, put options, well, just explain for people out there, put options are?
Put options are a form of protection that if the market goes down, you'll make money.
Exactly. Thanks, Bill. Perfectly said. So again, essentially, as Bill was saying, put options are bought when people, traders, and in this case, big money institutions, when they think or they expect a crash in the market. And Jason continues, more importantly, they spent a whopping $8.1 billion on those contracts. That is almost double the amount of any other week in 22 years. And he says, if you look at the total amount of money institutions spent on bullish strategies minus bearish ones, it's also at a record spread. And Jason says they spent $1.6 billion more on bearish strategies than bullish ones. And what is also interesting here, by the way, guys, it shows how out of shape I am because I'm walking up this hill. And as you can see here, it's a bit steep here and I'm running out of breath already. I should go exercise more, Bill, I tell you. Anyway, and Jason says over here that these big money institutions, they spent a jaw-dropping $1,638 per put option. In case you're wondering, they spent only $153 per call option. So it's a massive spread. And Jason says, when we net those out, it once again shows the sudden and record-shattering demand for protection against the crash. So in other words, guys, these big money institutions are absolutely fearful. They're petrified and they're worried about a major crash in the market. So let's have a look at the chart. And you can see, guys, look at this. And Jason, by the way, was saying this is absolutely, look at this, Bill. I mean, take a look. I mean, I showed this to Bill earlier, but what do you think about that? I mean,
this is one of the most shocking things you will ever see if you're interested in the markets.
It's true. Even Jason was saying that when he first saw this chart, he thought there was something wrong with the data. And it might be, but he doesn't think there is anything wrong with the data. Essentially, big money institutions are petrified. They're absolutely scared, and they've been buying again, protection, insurance against a potential crash. So they're really worried and concerned. Now, I'll talk about this with you, what it potentially means in a few minutes, and whether these big money institutions are really as smart as they claim to be. Now, here's where it gets interesting. Jason says, while many investors like to assume that big money equals smart money, that is not the case. On an individual basis, sure, but in aggregate, they suffer from the same biases and tendency towards herd mentality that everyone else does. So in other words, guys, when they all act together, they're pretty much no better than the average person. They act like the herd. I think, how do you feel about that? Do you agree with that?
I would 100% agree with that.
I would too. I've shown you this before in videos before that even so-called big money institutions can be majorly wrong. And in fact, let's look at the data. You can see that while they were right in 2008, in fact, in 2008, they were, strangely enough, they were absolutely right. They got in, they shorted the market and they were betting against the market right before a major crash, as you can see there. But unfortunately, in other years, they were not that good. They were not very successful. In the year 2016 and also in the year 2020, they actually were wrong. In fact, they were betting against the market right when it was bottoming. You can see, it says over here, Jason says, when they pay up for calls, stocks are usually near a peak. When they panic buy hedges, stocks are usually near a low. And again, the one exception probably was in the year 2008. What do you think about that, Bill? I mean,
Yes, I think this is a pretty good analysis, that we've got one example where they were right in 2008, and we've got a couple of examples where they got it wrong.
yeah. Do you think, I mean, what are you leaning towards right now? Do you think they're right now?
I think something big is coming, and I think most people are concluding in all across government, central banks, as well as hedge funds, are concluding that something very big is coming. We've had a lot of warnings from politicians as well as traders and bankers. So you know, it would be
you can't really believe what politicians say, right?
well, that's the famous saying. But I think that there is such a big consensus.
Yeah.
So often the consensus is wrong.
Yeah.
But maybe it is a good time to get some form of protection, because there's very little to lose in this situation.
It remains to be seen. I think, having read Jason's analysis here, he seems to be saying that big money institutions, when they act like this, we shouldn't put too much into it. We should not think these guys are smart. They tend to think like the herd. And again, these are human beings, allegedly, that's the case. And these guys can be more wrong than right. But guys, let me know what you think. Do you think that these bearish bets that the big money institutions are placing, do you think they're right? Or do you think actually it should be a contrary indicator? Oh man, it's so steep. It's a good exercise. Guys, I tell you, coming to Wales, it's one heck of an exercise.
There's fantastic valleys here, up and down, up and down.
So all I gotta say about this, guys, is that if you watched my previous video, I showed you two levels on the chart, one green, one red. So all I'm doing is I'm patiently waiting to see which of those levels gets triggered, okay? Because it could be either one of those levels. If the red one gets triggered, the lower one, that would be a kiss of death. So you probably saw my previous video about that. But if the green one gets triggered, that would be very bullish. All right, guys? So it's just a matter of being patient and waiting to see which of those key levels gets taken out. It's simple as that. And guys, make sure you also check out my members update. I'm going to go into more detail about the stock markets and also Bitcoin. All right, guys, so from me and Bill here in Wales, we wish you Yachida. Hey guys, Alessio. I just thought I'd make a quick video before I finish this video. And I just want to let you know where I am. This is, I came with this train to Mount Snowdon in Wales. This is essentially Mount Snowdon. Let me show you what's in front of me. If I just turn this camera around, let me show you. Check this out. Over here is, look at that. I think it's some kind of a spring or a lake. It took about an hour or so to take the train up here, and I'm heading back now. All right, guys. Definitely recommend. Check out this place in Wales. See you guys soon. Thanks for watching, guys.